Hey, everybody, welcome back to the Investors Corner podcast. I'm Steve Olson with the Peak Group. Today, I want to talk about something we've been quietly building for a while, and it's honestly become one of the most exciting parts of what we do, and that's flex space. So some of you have heard me talk about it before, some haven't. Don't worry, we're going to break it down completely because there have been a little bit of some changes on how we do that. So because the data backs up, our leasing activity is telling us already we need more flex space, right? It's telling us in real time. It's a sector that's genuinely on fire. And we're in the middle of it, some of the best markets in the country for flex space. So let's get into it. What is flex space? Why does it matter? At its simplest, flex space is a commercial unit that combines warehouse or light industrial square footage with a front office or a storefront component. It's like a Swiss Army knife of commercial real estate. One unit can function as a showroom up front and a storage fabrication space in the back. You can park a work van in it, store inventory, run small fabrication operations, set up a studio, or run a service business out of it. And the tenants who love flex space are your plumbers, your HVAC contractors, your e-commerce operators, personal trainers running a gym, cabinet makers, auto detailers, photographers, specialty food producers, basically any small business that's out there that needs, a little bit of a customer-facing component, but a lot of storage or room to perform their business. So they don't need a massive warehouse with that, but we can add more space. We can put mezzanine at the back of the flex space to give more office or more storage, hence its definition flex. These businesses, they fall between the cracks of commercial real estate and flex that was built exactly for them. And here's the critical thing from an investment standpoint. Demand for flex space has jumped 58% since the pandemic, and it's still climbing. That's not a blip. That's a structural shift in how small businesses think about microflex. The leasing market's now being dominated by smaller industrial users, and that's a real turnaround from the bulk leasing by large-scale users that used to dominate in the pandemic era. Larger logistics buildings are seeing vacancy rise, while smaller spaces are tight. They lease up quickly. In other words, the era of mega warehouse is cooling off. The era of small business operator needing a smart, flexible, well-located space, that's accelerating. And that's our lane. So let's talk about why it's different than other real estate components and other models. Before I get into the markets where we do this, I want to talk about that single most underappreciated part of owning flex space, and that's the lease structure. I found that people like this the most are usually investors that have a lot of experience with residential. After that, they crave what I'm about to tell you. Our flex projects lease on a triple net basis, and if you're not familiar with that term, I'll tell you why it matters so much. In a triple net lease, the tenant pays rent. They also pay their share of property taxes, building insurance, and maintenance. Not you, them. The ownership expenses that landlords typically lose sleep over in a triple net structure, those get passed through directly to the tenant as part of the lease terms. Think about what that means in practice. You're not getting a call because the HVAC unit needs a repair. You're not watching your margins shrink because your tax bill went up. You're not absorbing an insurance premium increase at renewal. Your tenants who are running businesses in these spaces, they handle those operating costs as a part of doing business. Your job as the owner is to collect the check. You contrast that with residential real estate, which I love and we do a lot of, but let's be honest, owning a rental house or a fourplex means you're one water heater, one roof claim, one difficult tenant away from a phone call that ruins your Saturday. The management load is real. Doesn't mean it's not worth it, but it's real. So flex space on triple net leases is fundamentally different ownership experience. It's cleaner. It's more passive. And for what I'd like to call the Main Street investor, someone with a real job, a real life, and a growing portfolio, it's the kind of asset that lets you own commercial real estate without becoming a full-time property manager. And we think that's a really big deal. It's one of the main reasons we've leaned so hard into this product. Let's talk a little bit about the numbers in our Texas markets, right? Primarily in the Dallas-Fort Worth metro. That's where we've been building and where we really started this. That's where the proof in the pudding is. The DFW market is one of the largest industrial markets in the entire country. Over 1 billion square feet of inventory. But here's the nuance that a lot of people miss. When you look at the overall DFW industrial market, you see a vacancy rate at around 9%. And that sounds elevated. Big warehouses with too much space to fill. But zoom into flex and small bay. In Q4 of 2025, flex came in at 6.6, the tightest of the three major product categories tracked in DFW and well below the pre-pandemic average. Rental rates for flex space average around $13 to $14 per square foot annually, significantly above the 9 to 10 average for warehouse space in the same market. That pricing premium exists for a reason. There simply isn't enough well-built, well-located small bay flex product to meet the demand from small businesses who need it. And even in DFW, small bay availability is only around 6%. That's down from 9% a decade ago. The supply has become so tight over time, and it just hasn't loosened up at all, right? And that's exactly why we're active here. In Weatherford, Texas, just west of Fort Worth, we're leasing up our first flex park now. And the demand has been fantastic. We're serving all kinds of small businesses, contractors, service companies, and specialty trades, all on triple net leases. And we have at least 40 more units in the pipeline here. The market's telling us to keep going, so we are. And then we have our project on Browning. It's a 12-unit project in North Richland Hills, Texas, right in the heart of the Metroplex. It's a higher-end product, better finishes, premium positioning, a project I'm really, really proud of. And it's nearly complete. It's fully triple net. It's going to be a great asset for investors who want institutional quality commercial real estate at an accessible scale. So you can check that one out at thepeak.group. More info coming on Browning soon. So we're expanding, right? Savannah and Nashville, right? This is where it gets even more interesting because we're not just doubling down in Texas. We're taking this model into those other two markets. Savannah, Georgia, if you've been following us, you know we already have a strong presence there on the residential side. It's one of the most compelling industrial markets in the Southeast right now for one primary reason, the Port of Savannah. It's the third largest container port in the entire country. It used to be the fourth, or now it's the third. Georgia is a logistics powerhouse, and the Savannah corridor has really strong tailwinds from distribution, e-commerce, and manufacturing investment. And when businesses want Southeast speed to market without California or Northeast costs, Georgia often comes up in their math. All of that activity creates a massive ecosystem of small businesses that support that port. Freight brokers and logistics operators and supply chain vendors, specialty manufacturers. Those businesses need flex space, and they're going to be signing triple net leases with us. We're moving into that market now. We've got land under contract, and I'm excited to share more as those details develop. So the next one, I can't get too specific yet on this update because we're still in active negotiations on two parcels, but I will say this, the Nashville flex and light industrial market is exactly where we want to be. Nashville's experienced a surging demand for flex space. It's consistently named as one of the standout markets for this asset class, right? That central location in Tennessee provides access to about 75% of the U.S. population within a day's drive. That's a huge deal for any tenant running a distribution or service operation. And when those deals close, you'll hear about it here first. So, why flex space works for Main Street investors? I want to land the plane by talking directly to the everyday investor because I think flex space is one of the most underutilized opportunities available to people who aren't institutional funds or private equity groups. Here's the ownership profile in plain English. You buy into a flex project. Your tenants are small businesses, stable, motivated, vested in their space because it's where they run their livelihood. They sign multi-year leases, and because it's triple net, they handle their taxes, their insurance, and their maintenance. Your monthly job is to deposit the check. There's no 2 a.m. call about a broken water heater, no negotiating with a tenant who lost their job, no absorbing $15,000 of roof replacement out of your cash flow. The business owner in Unit 7 who runs a tile installation company, he's not calling you when the overhead door needs a tune-up. That's on him by lease. Vacancy rates are tightening and new construction is lagging in this segment. And institutional capital is starting to circle the asset class. That's a big signal. When the big money starts looking at a product type, it's usually because the fundamentals have been strong for long enough that they can't ignore it any longer. So the Main Street investor who gets in now, before that institutional repricing happens, is in a very good position. So we hope you'll join us. Stay in touch with us on the Flex product. We've got more projects coming in both Georgia and Tennessee, plus everything that's already in the pipeline in Dallas-Fort Worth. I'm Steve Olson with the Peak Group, and we'll talk to you again soon.